Welcome back to our Talking Economics series with the Commonwealth Bank's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure, thank you.
A big year for global markets last year. What are the three biggest items expected to impact markets in 2025?
I think the three main factors is really going to be what's happening with inflation and interest rates, as well as key global geopolitical events. So we do expect inflation to continue to decelerate across most of the major economies, including here in Australia. And that means that interest rates can come down. So most other major central banks reduce interest rates in 2024. We think the Reserve Bank of Australia can join that trend this year, and we're expecting a rate cut potentially as early as February. But we do think interest rates will be down across this year, and that'll be really good for domestic and global economic growth. But we do have some pretty big geopolitical developments across the world. That could increase volatility and uncertainty, so that's certainly worth keeping an eye on. But generally, lower inflation, lower interest rates, that's good for growth.
Speaking of rates, last December the RBA held the cash rate at 4.35%. Your thoughts generally on that?
Yes, that decision to hold the cash rate steady late last year was as expected. And interestingly, that means the cash rate was unchanged throughout all of 2024. And that's the first year since 2017 where we haven't seen a change in monetary policy. So it's very unusual to go through out a whole year with no policy action from the Reserve Bank. But what we did see from the Reserve Bank in December last year was a real change in the bias, if you like, on their language. So previously they were saying that they couldn't rule anything in or out, so rate hike, rate cuts, but they removed that sentence from their statement, and the Reserve Bank Governor went out of her way to point out that the Reserve Bank's getting much more comfortable or more confident that inflation's heading towards the 2 to 3% target range. They specifically mentioned that the GDP numbers have been softer than expected, that wages growth was softer than expected. So in our mind, that really opened up the door to rate cuts in 2025, and we think that could start as early as February and further interest rate reductions throughout the course of this year. So our base case is a February rate cut with 100 basis points of interest rate cut throughout the year. So taking the cash rate from 4.35 now to 3.35 before the end of the year.
Stephen, can you share your thoughts around small business?
Well, I think for small businesses, the lower inflation environment and the interest rate reductions that we're expecting really are going to be quite key, because together they should mean stronger economic growth in 2025. We think growth this year will be around about 2% compared to close to 1% in 2024. So small businesses, really the lifeblood of the economy, should do quite well in that lower interest rate, stronger growth environment.
Finally, looking well ahead, key structural factors to impact global markets. Your thoughts on that?
Yes, I've been thinking about, what are the big key structural factors that could dominate global markets, not just this year, but for many years to come. And the way I look at it, there's the 5 Ds. So there's demography, aging populations, really important. We can see from our data that older Australians are spending more money and saving more money, and that's going to have an impact on the economy. We've got debt, lots of governments around the world building up their debt. They're going to have to borrow a lot of money over the next few years, and not just here in Australia, but certainly globally. Decarbonisation, so the move to net zero, very important for the planet. That's going to cost a lot of money. That's going to, again, create lots of opportunities and challenges for the economy. We've also got this decoupling from China, particularly in the US, a push to, if you like, reduce the role that China plays in the global supply chain. And finally, we've got digital. So particularly artificial intelligence really holds out the promise of a big increase in productivity, which could lower inflation and lower interest rates over the medium term. So lots happening in these big structural factors, not just for this year, but for many years to come.
Stephen, as always, appreciate your expertise. Thanks for your time.
My pleasure. Thank you.